right, good evening, everybody. It is Friday, November 18th, 2022. And wow, it was a busy week on Wall Street. So let's quickly review where the major equity indices closed for the day and for the week. The S&P 500, ticker symbol SPX, closed at 3,965. It was up about 18 points on the day. Now, it's something interesting to watch here, everybody, because we are still well below the 200-day moving average on the S&P 500. And quickly, some key levels to look at here. If you go all the way back to the S&P 500, when it bottomed in June, okay, so June 16th, 2022, the SPX was trading at 3,646. We rallied all the way up to about 4293 on the S&P 500. And that bear market rally ended on Tuesday, August 16th. Okay, so let's just quickly have the measured percentage move of that. That was about 18%, all right, about 18%. Then we went into another massive bear market sell-off, which concluded on October 13th, 2022, on a Thursday, where we bottomed at 3,500, and now we have rallied all the way to 3,966. That's about a 13% bear market rally. If we rally all the way to the 200-day, it's about a 15% rally from the lows, which would sort of corroborate with where we rallied to at the conclusion of the bear market rally at the conclusion of August. Okay, so just something to be aware of there. Okay, if we go over to the Dow Jones Industrial Average, had a pretty good week. We closed well above the 200-day at 33,745. And then lastly, if we look at the NASDAQ, let me pull up the NASDAQ here. The NASDAQ Composite, we closed up about 1 point today at 11,146, above the 50-day moving average, but below the 200-day. All right, if we take a quick look at the dollar or the Dixie, we do seem to be finding support right here at the 200-day moving average, and the dollar is actually headed higher. Okay, so we bottomed at 105. We're trading at 106.96. Now, here's the interesting thing, all right? So as you're looking at the major equity indices, it's important to look at the dollar because we put in a dollar top on September 27th. And that was when the dollar, or the Dixie, was trading at 114. We've declined all the way to 105. So if the dollar can really get moving here, at least back to the 50-day, which would be around 110, I think we could have a pretty ferocious sell-off here in the debt market. And last but not least, let's quickly check the US 10-year Treasury yield. So the bond on that yield, we closed today at 3.831%, trying to make our way back above the 50-day. So we're going to talk about that, but mostly on tonight's live stream, we are going to talk about some housing data. So we got some existing home sales data for the month of October from the National Association of Realtors. We are going to talk about that, and we are also going to be talking about and reviewing energy. Okay, so we're going to be talking about the Spiders XLE ETF as well as crude oil. So thank you for joining the live stream tonight. Let me put away my laptop. I will say hello to everybody in the chat, and we will get started. Very cold night. I think it's going to be in the 30s, so hopefully you all brought your jackets, hats, whatever you need. I think I'm going to have to put my hood up for the day as well. All right, let us get to the downstairs or street level before I say hello to everybody in the chat. But we are obviously starting off in the WeWork office. For those of you who haven't seen it, I'll give a quick mini tour. Austin City Limits, good to see you. Julia M, welcome. Yeah, I heard about that. So all of our friends in Buffalo, New York, I think you guys got, what, 2 or 3 feet of snow? Which is wild. That's insane. I couldn't even imagine dealing with that. Anybody in the chat from Buffalo, New York? How are you guys holding up with the snow? It's insane. Hey, Joseph Hardaway is here. Good to see you, my friend. Edward Adams, welcome. Greg says I got my virtual snow gear on. Love that. All right, I'll talk to you guys on the other side because usually we have some issues in the elevator. All right. Hey, have a good one. See you later. Oh yeah, that is freezing. The cold smacks you in the face right as you leave the office. All right, team, we are starting off the stream here in beautiful Midtown East. We are on the corner of East 31st Street and Madison Avenue. And let me say hello to all my pals in the chat. I see Gregory's here. This is good evening all. Vonda Howard, what's up, Vonda? Good to see you. Ron McAllister says howdy, everybody. Sinjib says hey, Tom. Lonnie Leonard says hey. British Gray, welcome from Tampa, Florida. Gary Carpenter says hello there, everybody. Chris Beeman, what's up? Says hey, Tom and all. Mr. H says good evening. Charlie Richardson, Dr. Longus, Austin City Limits, Kevin Ramsey, Melissa White, Fred X. Good to see you, Fred X. God bless. Joe Driver says, nice tune, Tom, relaxing after a hectic week. It was a pretty hectic week. I'm definitely thanking God for the weekend, for sure. You know, stock markets weren't really too volatile this week. Mr. Wonderful is here. Good to see you. Welcome. Steph UH. Welcome, Steph. Millie Vanilli. Good to see you. Here's what I think we're going to do tonight, everybody, because I don't think it's going to be too windy. So if you see in the distance all the way down here is the Hudson Yards. So what I want to do is walk down downtown to about 22nd Street, Madison Square Park, and then I think we're going to cut all the way over to the High Line. And hopefully, if it's not too windy, we'll take a walk on the High Line and then we will conclude at the beautiful Hudson Yards. So hopefully it's not too windy because I don't have the microphone. Hey, Brad's Brain is here. Says yo, everybody. Good to see you, Brad's Brain. Wendy England. Samantha R says, hey, Tom and everybody. Good to see you, Samantha. Welcome. Hope you had a good day, good week. Hopefully everybody finished strong, closed some deals. Mike is here. Says, what's up? Hey, it's British Gray's birthday today. Fantastic. Love it. November 18th, a Friday. Beautiful day for it. Happy birthday, my friend. Top G says, yo, man, good to be here. Thank you. Appreciate it. Brad's Brain says, Tom, did you catch your train last night? I did. Right as the doors were slamming shut, I boarded the train and we made it. Thank God. So if you look straight down this road here, which I think is 30th Street, West 30th Street. Oh, I already feel the wind. You can see the Hudson Yards, and that is where we should be going tonight. Samantha R says, Tom, did you see that it's supposed to snow tonight? Is it really? That's insane. Hopefully not. Well, I mean, it feels like it because it is absolutely freezing out. John Silva says, hey, Tom. So everybody, here's what we're going to be talking about tonight. So if you remember from last night's stream, I was highly anticipating a piece of economic news, economic data that was set to come out today. And we got it, right? And we heard from the National Association of Realtors as they reported their existing home sales data. And the data came in exactly how I expected. However, there were some things in the report that were actually quite surprising to me. And I'd like to talk about that with the group. Now, if you hear wind noise in the microphone, please let me know in the chat, and I'll try to turn down another street because I think the wind is picking up a little bit here. So existing home sales, everybody, fell for the 9th straight month in a row. So according to the National Association of Realtors, or the NAR, existing home sales dropped 5.9% from September. Samantha R says wind noise. Yeah, I gotta get, so my, what's it called? My microphone broke. So originally, the reason why I thought it was broken to begin with was the, like sort of that little Apple dongle. But it turns out it's the actual microphone. So I gotta buy another one off Amazon. Joseph Hardaway says, yeah, I hear it. Let me know if it's so bad that you can't hear me talking. We'll try to go down this way. Usually the closer we get towards the middle of the island, the less wind it is. But we'll have to see. Ryan Royal, God bless. Good to see you, my friend, as always. So we had a 9th straight month of sales declines. And I think it's important to talk about something very, very specific coming out of this report. And that is, even though every single month for 9 straight months now, we've been seeing sales deceleration or declines, prices generally on a year-over-year basis have actually been increasing. Now, as you guys know from the streams, we put a little bit more weighting on month-over-month numbers just because we could usually catch an emerging trend. Now, the interesting thing is, even though sales transactions are going down, inventory is actually remaining at almost all-time record lows. So according to real estate experts and economists out there, in order for the market to hit equilibrium, there usually needs to be about 6 months of supply on the market to match with demand. And right now we have significantly less than that. We're gonna get into the specifics, but first, check this out. This is a beautiful view of the Empire State Building here. This is on the corner of 5th Avenue. So if we continue to head uptown on 5th, we'll run into Koreatown, which starts at West 32nd Street. But we're gonna try to head down to Madison Square Park. Samantha R says 9.8. I think it's a 9.8. I think that's pretty appropriate, 9.8 for sure. Hey, Greg, thank you so much for the support. I appreciate it. Thank you, Greg. Charlie Richardson says, Tom, what is the model of the new laptop you got? So I got let me cross the street here. So my old laptop model was a ThinkPad. And it would only work when it was plugged in. So it was very cumbersome and obviously didn't work well. So the laptop shot out on me. So I got a MacBook Air, but I think I'm gonna need to go back to the ThinkPads because, really quick segue here. Anybody do extensive work in Microsoft Excel? Anybody in the chat? And there's this very, very big difference between doing Microsoft Excel work on a ThinkPad or any Windows-based device than doing it on a Mac. Some of the shortcuts and key functions don't work the same, and I use Excel a lot, not only for my job, but building different financial models. If I'm building a discounted cash flow model, I need all of those shortcuts and functions, and it doesn't really work the same on a Mac. Has anybody else found that? John Silva says, yeah, you're right. Yeah, I never really thought about it like that before. Weird. Latha's like, I detest Excel, but it's necessary evil. Yeah, that's true. NMB045 says I use Excel a lot at work. I am an accountant. I do accounting. Yeah, so NMB045, what are you running a Windows? Yeah, I'm gonna figure out what I need to do, because obviously I'm a big Apple user across like my phones and everything else, right? And I actually really like the MacBook Air a lot. I really, really do. But I just don't think it's gonna cut it, because I gotta be able to crank out Excel spreadsheets fast. I can't like do copy paste. I need the functions. Anyway, Latest says I only run Windows with Excel. Copy that. Vinny Castellano says, Tom, did you see Berkshire stock today? Wow, I didn't. What's going on with Berkshire Hathaway? I did not see that. Solo 401 is here. The man, the myth, the legend. Good to see you, Solo. Hope you're well. All right, let me give you guys one more shot of the Empire, and then we'll try to head over. I think this is an even better shot because you have more exposure here. Now, the October reading put sales at 4.43 million units sold, and sales were 28.4% lower year over year. So we are seeing the effects of interest rates price buyers out of the market, because if you do a deep dive in the report and you look, they actually listed the sector, I wouldn't say sector, but the segment of homes that sales transactions are slowing the most. And that is homes between $100,000 and $250,000, and homes priced 1 million plus. So here's sort of my take on that, because if we see sales volumes drying up in the sector, or in the segment where homes are priced 1 million plus, that probably means a couple things. And here's my take. Chances are, if you're buying $1 million piece of property or more, you're probably not a first-time home. So a classic 60-40, which would mean 60% equities and long 60% bonds. Well, this year in 2022 was the worst year by far for classic 60-40, right? Bonds have been getting crushed, getting sold off like crazy. At the same time, that equities have been getting pounded and hammered, right? So if you see plus homes, now demand is actually still pretty strong in the area of $300,000 to $600,000 homes, because that is typically where a first-time home buyer sits, at least here in the Northeast, right? And it's almost like you have double competition for those too few homes, because people that were looking at the 1 million plus, well, if they're going to buy a second property for investment or for a second home, they're probably going to be priced out of that 1 million plus, not only because they've taken a hit in their retirement accounts, but interest rates have gone on a near parabolic rise, year over year increase over 100%. So this time last year, interest rates were at 3%, and now they are near 7%. So I think that's why you're seeing a compression here into that particular area of the market. All right, so now we are at Madison Square Park. Pineapple Water says keeps buffering. Ooh, we're buffering? Yeah. All right, let me know if we're better now. We'll see. Long Island Ducks is 2 out of 3. Good to see you. War Walker, welcome. Hey, Dan Zeng is here. Says, hey Tom, how was your Friday? Tonight is freezing. Remember to stay warm. Yeah, it's really freezing tonight. And it's a little bit windy. I wasn't expecting it to be so windy, but indeed it is. Somebody says better now, but missed most of what you said. Yeah, so we can review it. We'll review it one more time. So out of the existing home sales data today, oh, check out the Empire State Building now. We're all lit up in red and green. That looks awesome. Out of the existing home sales data that we got today, it said there's declining demand, or if you look at all of the sales transactions and all the sales volume, out of the $100,000 priced homes and $250,000 priced homes, and the 1 million plus priced homes, those sales transactions are declining rather swiftly. And for the 1 million plus buyers, they're probably not first time home buyers, right? If you're in the market for $1 million plus piece of property, you're probably not a first time home buyer. So the reason why I think we're seeing transactions slow in that market, aside from the obvious fact that interest rates have gone up near 100%, well, the vast majority of people who have a net worth, I would say between, 3 million to 5 million in basic retirement accounts like IRAs or 401ks, they are probably set up in a basic 60-40 portfolio. And this year has been the worst year on record for a 60-40 by far. So I think you have people, oh my gosh, the wind is horrible. So I think in this environment, you have people where they've seen their retirement accounts decline by about, I'd say anywhere from 25% to 35%, depending on how you were structured. Probably 60-40, right? So you probably are seeing about a 30% decline across the board. So if you're going to buy a second piece of property for investment or as a rental property, you're probably now priced out of that segment, and you are now searching in the $400,000 range to $500,000 range, where the vast majority of all of the transactions took place. Hey, Jimmy Pease is here from Cali. Good to see you, my friend. Welcome. This is the 1 million plus buyers aren't impacted as much when the economy goes bad. Yeah, I guess I would say sometimes, right? Usually, I would say people who have a net worth anywhere between 2 to 5 million, fairly liquid in like retirement accounts and things like that. If you have a 30% drawdown, you're probably feeling that a little bit, right? I think the ultra luxury market, which would probably be like 10 million plus, those individuals generally aren't impacted as much, right? And I think we could call that segment the ultra high net worth segment. So I guess the bad news out of this existing home sales report is there's still incredible demand and competition right in that median sweet spot. So does anybody want to guess in the month of October what the median existing home sold for? Does anybody want to take a guess of what the median existing home sold for in the month of October? Hey, Malcolm Stevenson says, did anybody see the news about Qatar banning alcohol at the World Cup? I would be furious. No, I didn't see that, but I think it makes sense, right? Because, well, I guess the first game of the World Cup is Saturday, is it? Okay, so Vivian says 389,000. Ryan Beck says 450K. Sparks Carnival says 379,000. 350, 375 says Billy. Close. So I'll tell you guys, we're getting a lot of close, very, very close. I think running at altitude is the closest guess. So the median price of an existing home sold in October was $379,100. And chances are, and I understand that in many, many parts of the country, an entry-level home could be about, 250,000 and less. But I think in major cities and suburbs in and around major cities like New York, like Miami, parts of Texas, that is where the main entry-level home buyer sits, right in that level there. And that price actually increased on a year-over-year basis, right about 6.6%. So you saw the median price of existing homes sold on a year-over-year basis increase 6.6%. But I think the broader trend that we need to be paying attention to is the deceleration of month-over-month sales transactions. And that is just starting to happen. And I think that may continue to happen. Hey, Dan Zhang says, but Budweiser is FIFA's main sponsor. Here's what I think. Now, Qatar, I think it is mainly a Muslim part of the world. Is that correct? And a lot of my friends that I went to college with that are Muslim, they're not allowed to drink alcohol. They're not allowed to consume alcohol. So maybe that is one of the reasons. But again, I don't know. I haven't heard about it. But I think the first, the first game is this Saturday, no? Hey, Ramp 5 is here. Says, hello, everybody from Astoria, Queens. Good to see you. Malcolm says, sorry, I meant Bud are furious as only their beer was for sale. Yeah, I'm going to have to look into that. Deborah says, Qatar agreed to allow beer until a day ago. Wow. They're a $75 million sponsor. I could imagine for the World Cup, for sure. Sean says over 5 feet of snow in some parts of Buffalo, New York, as of an hour ago. Oh my God. Sean, I don't know how you guys do that up there, man. I mean, my God, that's insane. Hey, Dusty Cole is here. Says, hey, Tomcat and gang, how are you? Good to see you, Dusty Cole. Long Island Ducks says the first World Cup I watched was in 1966. Wow, crazy. Really wild. All right, everybody, so this is 6th Avenue, Avenue of the Americas, and 23rd Street Station, where you can get on and go uptown in Queens. So I know it is very, very windy out tonight, but I think we're gonna chance it. We'll see if we can, we'll see how far we can get before the wind gets too bad. We'll try to go all the way over to the High Line and then make a loop back. ATC, good to see you, welcome. The ABX girl, Pineapple Water, says it's about the fighting and out of control people. Ooh, yeah, that is true. Yeah, I mean, I don't know too much about it. I think probably both things come into play there. But this is looking uptown at the Salesforce Tower, Bank of America Tower. Jamie Massetti says the first game is on a Sunday. I'll probably be watching that for sure. If you look all the way downtown, check out this view of the One World Trade Center. I think that is probably the best view of the night so far. Adriana says hello from Argentina. Welcome. Thank you for joining. Mike Skate TV, Ramp 5. Deborah says the United States plays Iran on November 29th. I thought the first game that the U.S. was going to play is Wales. No? I'll have to look at it. It's sad, and I think I told you guys before, I used to be such a crazy, crazy soccer fanatic. I mean, I even played in college, right? But once the pandemic happened, once the Big C rolled through, unfortunately, all sports were shut down, and it was sort of like out of sight, out of mind, and I never really got back into it. I didn't even know the World Cup was going to be this year until a couple weeks ago. So, I don't know, I got to get back into it, but I don't know, anybody else sort of feel the same way in a bit, right? Like once the pandemic happened, it was sort of like sports were out of sight, out of mind. At least that's what happened for me. Barry Bellis here says, good evening all, welcome. Good to see you. Okay, Edward Adams says yes, it is Wales. Copy that. Before I forget, everybody, because we're gonna run down some data from the existing home sales report today, but I'm noticing a very, very interesting, I would say, divergence in this market. And I want everybody to look at the light crude oil futures contract. Okay, ticker symbol CL. And crude has actually been taking quite a bit of a beating. We're trading at $80, I think, even $80 flat. And if you go to tradingview.com or any particular charting software that you use, what you can do is you can overlay different indices and ETFs and even stocks on top of really anything, right? On top of other stocks, on top of commodities. And you'll notice, if you look at crude oil, we hit a high on March 7th. And we were the crude oil futures contract was trading at roughly $130, right? As of today, we're trading at about 80. So we are well below the 200-day moving average and the 50-day moving average. Now, there's a major ETF, the Spiders ETF, that tracks the energy sector, which trades under the ticker symbol XLE. So the XLE is near 52-week highs, while you're having a divergence in crude oil. Now, historically, when that happens, that tends to mean the energy trade is getting a little bit long in the tooth here. Historically, anyway. I think this is the best paper out of all of them. Little shout out to IBD. But check it out. So the XLE, and I think the top 5 particular stocks in the XLE, maybe ExxonMobil, Chevron, all of the major oil and gas companies, right? Now, we reviewed all of their earnings reports in both Q2 and Q3. Real quick, this is Chelsea Papaya. Not to be confused with Papaya Dog, which I believe is on 72nd Street on the Upper West Side, but not a big fan. I don't know, I'm just not a big fan of hot dogs. Anybody like Papaya Dog or this particular establishment? Not a huge fan, I'd say. Let's watch the FDMY go by. Hey, the Mighty Bull is here. Good to see you. Welcome. Deep Value Alex. Good to see you, Alex. James Bush says, hey, Tom, greetings from Australia. Love that. You know, I'm going to make it a point tomorrow to carve like an hour out of my day to get myself situated with the World Cup, because I really should. I shouldn't be a buzzkill. You know, World Cup once every 4 years. We got to get with the program here. London Crusader says, question, did you make the train last night? I did. I just made the train, just barely. Thank God. Right as the doors were closing. Latha says, CL came up as Colgate Palmolive. Yeah, so you have to go over to the futures tab, right? So if you're on TradingView or really any type of charting software, even like Google Finance or Yahoo Finance, there's some tickers that share the same ticker with other stocks. So light crude oil futures is CL. I don't know, I just wanted to point that out because I'm not sure if anybody remembers the live stream we did about 2 months ago. And the reason why I did this live stream specifically is because 2 months ago, Barron's had a cover story, and it went something like this. I don't remember the exact title, but I will get it for you guys, and I'll post it on my Twitter. So if you want to follow us on Twitter, you could follow at Walks Wall Street. And big front page over Barron's, it says oil companies unstoppable profits, and it's bound to continue. And that set off a little bit of alarm bells in my head. And it usually, I mean, not all the time, right? But you can use it as one of the indicators, maybe to be a contrarian or to counter trade. But if you have an environment, right, where we've been, what was it, March, April, May, June, July, August, September, October, November, 8 months now, right, since we've topped in crude, and we've been having crude oil go down while the XLE and the energy sector have gone up. And it's gone up for good reason though, right? Because if you look at corporate profits across ExxonMobil, across Shell, Chevron, all-time record high profits. But if you look at their earnings reports, a lot of their earnings came from very, very high refining margins. I always like looking at this barbecue grill here right outside this bar. So they made this barbecue grill like a cigarette ashtray. I think that's so unique. I don't know. Kind of a cool place. But anyway, so refining margins are bound to come down. And the reason why oil companies were raking in windfall profits is because crude oil historically, if you look at Q2 and Q3, was over $100 a barrel throughout that entire time. Well, markets are forward-looking, right? Markets are discounting mechanisms to the future. So if we are now in an environment where crude oil is $80 a barrel, well, I don't know. I think earnings may decline for these energy companies. Now, it may seem hard to believe because energy has been rocking on all cylinders. If you bought pretty much any sector of the S&P 500 this year, you probably lost money, except if you were long maybe energy and healthcare. So I think maybe the energy trade may be getting a little bit long in the tooth, but I don't know. What do you guys think? Do you guys think we'll ever see crude rally back to $100, or do you think that was the ultimate top? So this is 23rd Street Station, downtown Brooklyn. Hey, Julie M is here. Says, "Ugh, should I dump my XLE?" No, I don't. I mean, I can't advise on what to do or not. I am long a little bit of XLE, but I do have my stops pretty tight. I'm just saying historically. I'm just interested in sort of the mechanics of what's going on because, I mean, oil companies are raking in a lot of profits, but I mean, if we're going to be in an environment again where crude goes back to $60, well, I don't really know. I'm not too sure. Vivian says it will be higher. Ryan Beck says, I think we'll make another run at it. Well, what do you think would be the catalyst, right? What do you think would be the catalyst for us to make another run here in crude? Mike MTL says Biden's war on the oil industry will see higher prices in crude. Austin City Limits says, Tom, I can remember when gas was 49 cents a gallon. Holy crap. That's insane. Lee is here. Says, as long as the current political actors are in, keep XLE, says Lee. The ABX girl says, did the snow squall hit New York City yet? It has not. And I didn't know we were supposed to get a snow squall tonight. I think that'll be kind of cool to see it on the stream, though. Mike C says, Tom, oil companies are feast and famine. If they get punished during the feast, shouldn't they get helped during the famine? I don't know. Are you talking about like a subsidy? Long Island Duck says Russia is a potential catalyst. You know, I think that could have been a potential catalyst before the invasion, right? Because markets are, again, forward-looking indicators, and usually, there's an old saying on Wall Street, you know, buy the rumor, sell the fact. Has anybody heard that? You know, buy the rumor, sell the fact. And usually leading up to the event is when you see the price appreciation. But once the event happens, or during the event, it's usually priced into the market already. So I don't know, we'll see. I think it's going to be interesting. I just wanted to bring it up. Malcolm says, Tom, now you guys have completed the midterms. How do you think this will impact investors? Well, historically, looking out 12 months after midterms, there's about a 90% probability that stocks will be higher 12 months after midterms. But there's a couple things that are concerning me in this market, and we've talked about this before, but I think it's so critical that I need to say it again. Now, we are now almost entirely through Q3 earnings season. And on a year-over-year basis, we saw a 10% decline in S&P 500 earnings. So, oh, real quick, hold that thought. So this is where we are headed, everybody, to the beautiful Hudson Yards. You can actually see the Edge building here. But I'm gonna try to take you guys on the High Line. If it's still open, I think it probably should be, but we'll see. So anyway, where I'm concerned is I think that a lot of analysts on Wall Street are a little bit too optimistic with their earnings forecast for next fiscal year. So I'm talking about forward earnings, right? And we've rolled through earnings season, and in almost every single earnings report, companies have guided below analyst expectations, and they've given profit warnings for the next fiscal year. So assuming right now, I don't know the exact forward PE ratio, maybe one of you guys could look it up in the chat as we're talking here. Real quick, this is 9th Avenue. So we have 2 more blocks to go over, and then we should be at the High Line. So usually I think right now, the S&P 500 is trading at a 16.4x multiple of next year's earnings. Now, it could have changed throughout the week. I don't know the exact forward PE of the S&P. Maybe somebody could drop it in the chat. But assuming analysts across the street cut their earnings estimates for the S&P 500 for next year, well, the market is going to have to reprice and probably go lower. Because let's say if we have, you know, a standard 15% earnings cut for next fiscal year, well, instead of trading at 16 times forward earnings, well, that would mean the S&P is actually trading at maybe 18 or 19 times, which means if it wants to price back to 16 times forward earnings, prices have to come down a little bit. So, I mean, that's my only concern. Because at the end of the day, earnings drives price. And price is mainly driven by liquidity. And we are having a little bit of a liquidity crunch here because central banks, not only in the United States, like the Federal Reserve, but globally, if you talk about the ECB and the Bank of England, they are also raising rates. Hey, Deep Value Alex, Tom, I wonder if the Nord Stream attacks would impact the crude/energy sector long term. I think it would. I think it would definitely have some ramifications there. OF says, let's talk about how fake a value for a stock is. I'm not sure what you mean. Joseph Hardaway says, yes, they've been overly optimistic a few times since 2020 and 2019. custom-built American fire trucks. This is Tom, thoughts on the lithium industry. I think lithium is very important because, now, did anybody see I shouldn't say it's an interview, but Elon Musk did a very, very short impromptu interview with somebody. I forget who the reporter was from. It may have been a Reuters reporter. I think it may have been Reuters. Anyway, it doesn't matter. But did anybody see that clip of Elon Musk talking about the lithium industry as it relates to government targets for EVs? And Elon Musk said that at the current rate, if we want to meet those EV targets that the Biden administration has set, and other leaders across the world has set for EVs, he's like, we don't even have the capacity to churn out that much lithium to meet those requirements. So we're going to need to ramp up on mining production. Now, where I'm concerned, and I've told you guys this before, all right, this is the entrance to the High Line, finally. And I've told you guys this before, but everybody wants to push this ESG nonsense, right? Environmental social governance. And my take is that the vast majority of it is just nonsense, right? But if you think about where we get our lithium from, it just so happens that the places in the world where lithium and other rare earths that we need to make these batteries for EVs come out of places like the Democratic Republic of Congo and other places across the world that still use child labor, slave labor, and other things. So I hope we have a plan as a country to not exploit those particular places and maybe have a plan B, because this is it could be a magic elixir here where the world funnels and makes these parts of the world where scumbags live and exploit their people, where we could make them really, really rich. So I think we need to have a clear go-to-market as a country, right, or the Western world, to say, look, we need to be sourcing our lithium from people and places that aren't going to exploit people, and specifically if they still have slave labor. And it is a very real reality, especially in places like Congo, where they do have really, really bad working conditions, child labor. So that's my concern. Whew. All right, team, we made it. So we are now on the High Line. Hey, Pineapple Water says that is why China owns a lot of Africa. They don't care about thinking about their own future. Yeah, I mean, that's my biggest concern about it. I think I've said that before. Because look, if we think about the main technologies, wow, look at these apartments here. These are beautiful. These are really, really nice. The main technologies that are going to drive the remainder of the 21st century are things like EVs, right? Electric vehicles. But in order to make those products and services, you need those rare earths and those precious metals where, we need to make sure we're getting them sustainably, is what I'm saying. Hey, William Brooklyn is here. He's checking in from Brooklyn, New York. Much respect to the smartest person on YouTube. Hey, thank you so much, my friend. I appreciate that, William. I appreciate you being here as well. Billy says slippery slope. It's like you can be against child labor in cobalt mining. Yep. But don't do it with an iPhone in your hand and Nikes on your feet. Yeah, and so Billy makes a good point. So Tim Cook, there was a big announcement, big news out of Apple. I just want to take you guys down one block south, because there's this very, very unique apartment building that they just completed. I want to show you guys. But so Tim Cook made an announcement, I believe it was last week or earlier this week,
that they will be reshoring some of the production capacity of their chips from China to the United States, places like Arizona. And I think this is a part of a broader trend. Oh, these are really cool here. Could you imagine having your apartment with the fire escape overlooking the High Line? That's beautiful. I think you're going to see reshoring of the manufacturing sector here, because number one, you can't rely on a zero COVID policy in China, but more specifically, Foxconn has had some really terrible accusations, and I think many of which are true, of the horrible working conditions there, so bad that they had to actually build nets around those facilities because employees were actually trying to, I think you guys could, use your brains and see what I'm trying to get at, but it's a good point. So here's the building I'm talking about. Look at how unique this is. Hey, Fernando Alvarez, thank you so much for your donation. I appreciate it. Thank you for joining the Walks from Wall Street stream tonight from the High Line here in New York City. Ryan Beck says Vietnam is getting a lot of new business that's leaving China. Yeah, also I think India too, right, Ryan? Is getting a lot of that business as well. NYT says also not to include the electrical grid will be unable to keep up with the demand. Tons of money, research, and upgrades need to even start going down that road. That is a very good point as well. It's funny, and I guess I'll just set the stage to say this, because a lot of the times my words can be misconstrued. I am all for clean and green energy. I think everybody is, right? However, I'm for doing it in a responsible and sustainable way, sort of like what Jamie Dimon said, right? And I think a lot of the politicians, they just make these grandiose statements just to get votes, to say, oh, we want to take oil production to zero and we want green everything, the Green New Deal. But they don't understand the ramifications of bringing oil production to zero overnight, right? I mean, literally, think about all of the things that are made and produced from crude, right? If you could just take out a notepad and write down all of the things that are made with crude, I mean, you'd go on and on and on and on. So the next point is, hold on, I want to show you guys, I want to get you a good centered view of the Hudson Yards here. Check out those, I think these are like penthouse apartments on this side. This is amazing. You have floor to ceiling windows, wraparound windows out of the entire thing. That's beautiful. Also, when you plug in your electric vehicle, right, where do you think the power is coming from to power and charge your electric vehicle? It's coming from non-renewable resources most of the time, okay? Most of the time. So, I love the environment as well. The United States can, at some point, I think they just closed it. That's a bummer. Oh well. The United States can, at some point, transition to 100% renewable energies, but it's going to take time. If you want to accelerate that, then you need to go all in on nuclear energy, right? Nuclear power production, not closing down nuclear power plants. Hey, Paul Tricky is here. What's up, my friend? Good to see you. Welcome. Mouse Sports Cards is here. Gary Carpenter. Joe Driver, welcome. Yeah, Destructionist is somebody's watching Walks from Wall Street up there. It's just such a unique building, isn't it? I'll give you guys one more look at it. Yeah, Michael Joseph says asphalt is made from petroleum, so I guess no more paving smooth roads for the new electric cars. Yeah, I think it's just all about being honest about it and not just making grandiose claims. All right, before we head down, because I think they're closing it up, I'll give you one more view of the edge, and then we'll head down. Is this closed off this way?
Yes.
Okay. Have a good one. All right, well, at least we walked a little bit on it. We'll have to head back down to the ground level. Hey, Skyline 2020 says, Tom, energy production is twice as efficient at a power plant when compared to in a car engine. So even if electric cars are powered by fuel power plants, it's way more efficient. Thank you for that. All right, so they closed the High Line. Well, that's all right. We saw a little bit of it, but it's a bummer because we have to stream so late at night, around 8:30. We always start these streams at 8:30 because it's when I get off of work. But the High Line's an awesome place. Absolutely beautiful. Hey, Denise NYC is here. Good to see you. Michael says, hey, Tom, are you excited for the World Cup? Who do you think that is going to win? Greetings from Brazil. Hey, good to see all of our Brazilian viewers. Thank you for being here. Yeah, I'm excited for the World Cup. Now, we were just briefly talking about it. So the first game is Sunday, right? So I think I'm going to spend some time tomorrow doing some research to see who's playing in which groups and everything like that. Because as I said before, you know, unfortunately, once COVID hit and all sports sort of turned down, I just kind of got disinterested in it. And now I got to get back in the game and focus on it. I used to be a huge soccer fan. I played in college, so I think there's more to be focused on there. Yeah, Jordan from Canada says, Tom, hope you enjoyed doing jiu-jitsu. I heard it's a life changer. It is. It really, really is. So I'll touch on that for a bit because I think it's important. These two are also new buildings at Hudson Yards. We'll check it out. But yeah, so I started doing jiu-jitsu about 2 months ago. And when you first start to do it, it's very, very frustrating. And I think it's good to be not only physically challenged, but mentally challenged as well. And I think anybody who's done jiu-jitsu before or just first started to do it, you sort of understand what I mean, right? Like it's just, I don't really know how to explain it. It's just very difficult. Very difficult, physically taxing and also mentally taxing. And in my experience, jiu-jitsu is the one, I would say sport, right? Sport, martial art, where size really doesn't matter, right? I was seeing some guys in the gym. I mean, these guys are like 5'6", you know, not really appear to be that strong. But I mean, these guys can wrap you up and freaking choke the hell out of you. It's just so crazy. And it's, yeah, I mean, I'm still very new at it, but it's frustrating in a very good way. Very challenging. Hey, Sam is here. Good to see you. Oh, I think this is the Avenues School. I think Avenues is one of the most prestigious schools there is, I believe, for high schoolers. And the only reason why I know about this school, Avenues, is because somebody moved into my neighborhood in Miami, and they were talking about it. It's a wealthy family from Boston. Check out the beautiful view of Empire State Building from here. And I think they're building an Avenues school down in Miami, and I think the tuition is like $75,000 a year just to send your kid to high school. But yeah, and I think they're extending it to Miami because so many people have been moving down there. Malcolm, good to see you. But if you guys are enjoying the live stream tonight so far, feel free to leave a like on the video and hit the subscribe button if you're new. We do these live streams about 5 days per week between New York City and Miami. We love to have you here. Yeah, Miguel is like, so purchasing an entire Tesla every year just to send your kid to school. Yeah, I mean, some of the private schools are really pricey. Very, very pricey. Now, I don't know. I've never been to a private school. You know, I was educated in the New York State public education system. And I think I turned out all right. I mean, I don't know. Maybe it's just more of a networking thing, right? I mean, the people you be around, if you can afford to spend 75 G's a year to send your kid to school, it's probably invaluable from, you know, a networking perspective. I don't know. Maybe it's worth it. Yeah, Ryan Beck is like, I was a public school kid. I ended up okay. Yeah, maybe it's like a networking thing. I think the same about like Ivy League institutions, right? My view is that if you can get into a top school like an Ivy League, I think it's worth going because yes, you're going to get a good education, but you're also going to get to take advantage of all of the networking opportunities of other very, very smart and brilliant people who go to those schools. Another awesome view, by the way, here. We never really come down this way, so. Hey, Gabriel says, hey Tom, I am from Belize. I am interested in cryptocurrencies. How do I get started? Any advice? I think I would just start to read about it. Now, there is a good book that I do recommend that is called The Bitcoin Standard. I think that's the best overall book to read about Bitcoin specifically, and I'll tell you why. Because in the Bitcoin Standard, it just doesn't talk and just doesn't like shill random cryptocurrencies. It actually gives you a history lesson throughout the entire history of fiat currencies across the world, really since record keeping began, right? So if you want sort of a baseline foundation of history of fiat currencies, also history of central banking, not only via the Federal Reserve here in the United States, but the ECB, the Bank of England, and global central banking, I think that's a good place to start. Now, in my view, I think there's a very, very big difference between cryptocurrency and Bitcoin, because it's sort of like what you've been seeing right now with all of these blow-ups with, you know, FTX. It always stems from one of the crypto tokens or the altcoins going bust, and then they find out there was some nefarious activity and fraud going on. So I would really, really stay away from the individual altcoins, because I think there's a lot of frothiness there and maybe nefarious activity. But I would read that book. I think it's a pretty good book, The Bitcoin Standard. All right, so we made it, everybody. We are here at the Hudson Yards. The city really did a nice job here. And I think I told you all, if you walk about 2 blocks, I think it's like 2 or 3 blocks up, which we'll do now, right across the street from the Whole Foods. When I was in college, so all the way back in my college days, I would get off the train at Penn Station. I would walk over here to 10th Avenue, and none of this used to be here, by the way. So I'm not sure if you guys can even picture this in your head. Maybe some of our New Yorkers that are in the chat, but all of these brand new, beautiful buildings you see were not here all but 8 years ago, right? So everything you see here on 10th Avenue is completely new. So there actually used to be one of the only, and I think the only, drive-through McDonald's. It used to be right here. And I remember when I was a freshman in college, I would always walk in there and get like a biscuit or a coffee or something before soccer practice. And I think that McDonald's gave the developers at Hudson Yards such a hard time. And I think they got bought out for like a ridiculous amount. I don't know if that's true, but that is a rumor. Yeah, 161s is nothing but prostitutes used to be in this area in the 70s, 80s, and 90s. Yeah, it's insane how much it's changed. I mean, they did a really good job here. You have a Whole Foods, a Peloton that's going to go out of business. I shouldn't say that. I shouldn't have said that. But it's a nice area right here. Now, Peloton is one of those stocks that have been gotten hammered. I think down almost 90%. Now, did anybody notice what the management is trying to do at Peloton? Instead of buying or selling their bikes, I think they're setting up sort of a lease structure where you could lease the workout equipment just so they get some revenue going. But yeah, Ryan Beck, the lease to sub, yeah. JM, good to see you, welcome. Ryan Beck is like, that's what they should have done the entire time. Okay, anybody in the chat have Peloton? Anybody in the chat? Hey, Kevin Sunderland, thank you so much for the $10 donation, my friend. Good to see you. Says Tom, really skeptical of the high interest rate crypto exchanges offer to park money in their stable coins. Yeah, so Kevin Sunderland hit the nail on the head. And I've said this before, but thank you for your donation, Kevin. I think if we think back to Finance 101, right? And we understand how the lending market works, the big problem, and I've screamed this from the rafters for so long, is a lot of these crypto exchanges and platforms like BlockFi, I think FTX was doing it, that are offering unrealistic yields on crypto lending. It's almost all the time some sort of a Ponzi-like scheme. Because think about it like this, okay? Beautiful view of the Empire. If somebody is offering you an 8% APY risk-free rate of return per annum, okay? That means in order for that company or that bank or that institution to be profitable, they have to be making more than 8% on your deposit. And that is just not sustainable. That's not real, right? So you should have little alarm bells going off in your head anytime you see these cryptocurrency lending platforms offering a risk-free rate of return over what traditional banks are offering, okay? And this is exactly what we saw with BlockFi going under. This is exactly what we saw with FTX going under, because in order to juice those returns, you need to use extremely high leverage and very risky loans, right? So a lot of these exchanges, being that they are unregistered and they're not licensed, and unregulated exchanges, they don't have to have the same type of capital requirements as traditional banks. So they can use derivative strategies and leverage client funds like crazy to try to meet those returns, but it's not sustainable, so they always implode. So it's a good point. So Kevin makes a good point. You know, if somebody is offering you a risk-free rate of return that you couldn't walk into, I don't know, let's say Bank of America, Santander, or any regular bank to get, it's probably too good to be true, and it probably is not right. Wow, Billy says, Tom, my friend was offered $150,000 to promote FTX. He called them and asked how they go about guaranteeing his followers an 8% return, and they could not get an answer. Jeez. Yeah, and that's another problem. I have this sort of unspoken rule. Anytime, and it's kind of a mean rule, I don't really like saying it, but it's true. Anytime that you see a celebrity, okay, promoting some type of investment, you should probably stay as far away as possible from it, because at the end of the day, look, these celebrities are very talented. I understand they're very nice. Tom Brady, he's the best football player to ever do it, but these people are not skilled in finance, okay? They're not financial advisors. They don't even manage their own money. They have teams of people to manage their own money for them. So you should not be taking financial advice from Justin Bieber and, you know, whoever the other one is. I don't know. Anyway, that's all I'll say. All right, team, here we are at the beautiful Hudson Yards. I mean, the wind is really picking up here. But I think they did a really good job with the decorations here at the Hudson Yards. Looks beautiful. Sparks Carnival says, Tom, Palo Alto Networks was up another 8% today. Thoughts on CrowdStrike, though? Yeah, so Palo Alto Networks is coming off of a very, very good earnings report. They beat on both the top and the bottom line. But here's my concern, right? Now, Palo Alto has fallen a lot less than a lot of the other tech stocks out there, but I like to use this analogy. It's very hard for a trout to swim up a waterfall, right? And right now, we are in an environment where the major equity indices are in very, very steep decline. So it's hard to go long a lot of this stuff when the overall market trend is in a screaming downtrend. Now, I think from an earnings standpoint, I think that CrowdStrike and Zscaler are gonna have really good reports, right? If we use Palo Alto Networks as a proxy of what's gonna happen. But I think, in my opinion, just based upon the products that I've sold and what my clients use, I think Palo Alto Networks is by far the leader in cybersecurity. So does anybody remember this building right here? Now, I think it was maybe a month ago on the live stream, we were streaming the lobby of this building, and we actually ran into, I think, the lead architect who designed the entire lobby of this building and the other one adjacent from here, which is pretty cool. And I think they did a pretty good job. Everything looks really modern. Everything looks really nice. I think the city and the developers here did a fantastic job on the Hudson Yards. And this is the 34th Street Hudson Yards 7 train. So you could actually take the 7 train all the way to Hudson Yards now, which is pretty cool. Right here is the Jacob Javits Center. Hey, Abdullah is here. Good to see you, Abdullah. Welcome. Samantha R, welcome. So this building is actually the Equinox Hotel. And I think it is ridiculously expensive. I think the Equinox Hotel goes for like $1,000 a night for a room, if you could even believe that. Photos from around New York, good to see you. Shatoya Davis is, Tom, what's in that building? So I believe BlackRock is going to be a tenant in the building, if I remember correctly from talking with the gentleman. And right now, I believe BlackRock's global headquarters is right off of Park Avenue, but I think they're going to be moving here. Now, I know for sure that KPMG decided to close down their global headquarters on the east side and move to the Hudson Yards. So that's actually pretty cool. So this is going to be a big booming place in the next couple of years. Right here is the vessel, looking great. Yeah, it is very windy. That's the only downside of Hudson Yards. Dr. Longus is, Tom, do you know the architect Peter Marino? He's a friend of mine, uncle. His office is in Manhattan. I do not, but I'll have to take a look at it. All right, let's cross and maybe we can go inside to get out of the wind for a little bit. I'll show you guys inside the mall, if we're allowed in. FredEx is inside. I've been checking out careers at CrowdStrike Palo Alto. They've been hitting me with ads. Very nice. Well, I think, look, in my view, and we talked about this last night, I think even in a recession, right? We are going into a recessionary environment. Businesses, organizations in general are looking for any place to cut costs. Now, here's the thing. They're actually, and I want to be careful with my choice of words here, but it's almost as if businesses are unable to cut costs in the form of cybersecurity. Because I always say there's always a bull market somewhere, you just need to know where to look. And unfortunately, there's a bull market, a raging bull, in cybercrime. There's been more cyber crimes last year than the year before and the year before that, and I think that's going to be a continuing trend. And as we have more cloud adoption, right, as businesses move to the cloud or establish a hybrid environment, you're going to need to secure your infrastructure, and thus spending on cybersecurity is going to need to go up. So I think as if cybersecurity is one of the only things that may be recession-proof. Hey, Destructionist, my husband is in cybersecurity. That's a fantastic career, very, very well needed. Man, they did a really good job on the Hudson Yards. Everything looks fantastic. Now, I'm so glad that they went with the classic white lights here. I think I told you guys yesterday, I'm not a big fan of like the tricolor, multicolor lights. I think it looks a little bit tacky, but this looks perfect here. This looks really good. Lather's like it's a little bit too much gold. Hey, Teresa Diaz, thank you so much for the $2 donation. This is thank you, new subscribers, 24,300 people. That's wild. Well, I appreciate everybody who's been joining us each night as we talk about the financial markets and walk around the city. I appreciate you guys being here. It's definitely a good time. Hit the subscribe button if you haven't already. Thank you, everybody. But yeah, I think, in general, let's quickly review, and we've reviewed this before on the stream before, but we've talked about major cybersecurity events here locally in the New York metropolitan area, okay? And also in California. I think it was, the Los Angeles Public School District was hit with a massive cyber attack. Then we had Suffolk County, New York, which is, for those of you who don't know, Suffolk County is a county to the east of New York City. So you have Brooklyn, Queens, then you have Nassau County, and then you have Suffolk County. Suffolk County was just rocked with a massive cyber attack. So it's not only businesses, so corporates are going to need to be building out a cybersecurity infrastructure, but it's also state and local governments as well. And I think I've given this tip before because for those of you who don't know, I am in tech sales, so software sales, tech sales, and a lot of my other friends are as well. And of my friends that are doing the best in 2020, they've been in SLED sales, okay, as it relates to cybersecurity and traditional telecom. So SLED stands for state and local government. So if the hierarchy of a sales organization, hold that thought. This is what the Hudson Yards used to look like. This is the West Side Yard for the Long Island Railroad. These are the trains that I get on to go home. But if you look all the way across the river, we'll see our friends in New Jersey, which is very beautiful and fantastic, all that good stuff. And then you have the Jacob Javits Center right here. But in the hierarchy of a sales organization, you have your SMB, which stands for small to medium-sized businesses. Then you have your mid-market. Then you have your enterprise sales. So you're selling into the Fortune 500, Global 2000 clients. And then you have SLED sales. So you are selling to state and local governments as well as education, which can be very, very lucrative, especially, I would say, depending on what you're selling, right? So this past year, the United States government approved additional spending on cybersecurity infrastructure. So chances are, if you are an account executive in state and local government sales at like a CrowdStrike, Palo Alto Networks, something like that, a big cybersecurity company, chances are you're probably doing pretty well. So just a quick tip there. Ethan R says, hey Tom, what are your thoughts on Hoboken and Jersey City? So I would say I like Hoboken a little bit more. And I think I've told this story, but when COVID really rocked New York, all of the rules and regulations were so convoluted that many New Yorkers on the weekends, just for something to do, we'd actually travel to New Jersey to Hoboken because there was no indoor dining anywhere in Manhattan, but there was indoor dining in Hoboken. So everybody would just take the PATH train. And that's the first time I've ever been to New Jersey. And I thought the place was fantastic. It really, really surprised me just how amazing it was. Now, the interesting thing is I think Hoboken is actually almost as expensive as Manhattan now. Because chances are if you're living in Hoboken in one of those high-rise apartments, you have a really nice view of Manhattan. Probably a better view of Manhattan if you live on the island or in Queens. But Hoboken's a great place. I really like Hoboken. Hey, Ed T, good to see you. Welcome, Ed. Jordan from Canada, welcome. Fred X says, I don't trust the vessel. Hey, Zozo Bob, welcome. Tony is here. Touring different places. Good to see you. Layla says, Tom, I had the best view of Manhattan from my apartment in Hoboken on Washington and 5th. It was amazing. So Layla, back in the day, how much were you paying? And did you have like a 1-bedroom, 2-bedroom? So for the people who were just joining, let's quickly review what we talked about today. So we heard from the National Association of Realtors as they released their existing home sales data for October. So existing home sales fell for the 9th consecutive month in October, okay? Sales dropped 5.9% from September to October, and the October reading put sales at 4.43 million units sold. That's about 28.4% lower on a year-over-year basis. So higher interest rates are really impacting the housing market here. Wow, this looks unreal. Higher interest rates are really, really impacting the housing market here and grinding to a halt sales transactions. But the interesting thing is, on a historical basis, inventories are actually very, very low still. And I think that's because of a lot of fear in the market. And what I mean by that is this. Let me go inside first before my hands fall off. Wow, this is nuts. All right, on a scale of 1 to 10, everybody in the chat, what do we think about the display here? I think I'm gonna give it a 9 out of 10. I mean, I don't think you could get much better than this. This is crazy. Yeah, I think I'm gonna give this a 9. Steph UH is 11. Yeah, it's awesome. Hey, Sabrina Fair is here. Good to see you. Susan Mullins is 9 out of 10. Yeah, they definitely did a good job here. Hey, Tiago Pereira, welcome. Let me see if I could take you guys up the stairs, but usually we have a little bit of an issue in here due to the signal. So let me know if the signal strength is no good. Someone says need some color, maybe a 7. Yeah, maybe a little bit too much gold, but I think it looks good. I don't know, I'm not really a big fan of the multi-colored lights. I know, Samantha always like the camera doesn't do it justice. It's gorgeous in there. That's true. Now, hopefully someday when we're able to stream in 4K, it'll look a little bit better, but we'll see. Hey, Pixel Logic, welcome, my friend. Joan K. OF's quality of content is at a 10. Thank you. OF, very kind. Now, the two, I would say, cleanest shopping centers or malls that I've ever been in my life is probably number 1 is Brickell City Center in Miami, Florida. And number 2, maybe even this may beat it out, is the shops at Hudson Yards. I mean, they keep this thing really, really clean. All right, we got to do another rating from the second floor. So view from the second floor, scale of 1 to 10. I'm gonna go. I think eye level is a little bit better. So I think I'm gonna go 10 because this looks unreal in person. Hey, Savi is here. Good to see you, my friend. Happy Friday to you. Joan K says hello, Tom. Greetings. Time lapses. I wonder what rent per square foot is here. You know, I'm actually curious about that too. I may have to Google that when I get on the Long Island Railroad. Now, I would presume, and let me know if you guys agree or disagree. I read a really interesting article. I think it was this time last year. I think we talked about it on the stream, but I read an article in the Wall Street Journal about this time last year that in major cities specifically and in major shopping centers, these stores actually don't make that much money. They are mainly used as showcases for people to come by and look at items and then make their purchases online. So they usually just mainly use these retail fronts as showcases to drive sort of like viewership, and then most of the purchases are made online. So they're actually loss leaders, if you want to call it that. Dusty Cole, God bless you, sir. Thank you for being here as always. William M says, beautiful space, great walk tonight. Thank you, William. Emmanuel says, so how can these places be more productive? Well, I don't know if they can, right? I don't know if they can. I think you've just seen a fundamental shift in how consumers shop and how consumers purchase things. So it's sort of like they need to have it just for show, in a way. Now, I would assume in some cases, many of them are very profitable, such as maybe the Apple store at Fifth Avenue. I remember we took a poll and said, you know, what do we think the revenue is, or the average revenue of the Apple store on Fifth Avenue? And I think it does well over $1 million a day. Ryan says, Tom, go up 1 floor. All right, I'll go up the escalator right now. Wow, check this out. Man, that is crazy. They did a really, really good job. I forgot to tell you guys the supply. So this is important. So supply of existing homes is still very, very low, with 1.22 million homes for sale at the end of October. That is a 1% decline month over month, and also a consistent 1% decline in supply on a year-over-year basis. So if we think about supply in terms of months, how many months of supply are there on the market? Assuming the consistent sales rate, it makes up about 3.3 months of supply at the historical sales pace. Now, the interesting thing is, for the market to be balanced, right? Economists agree that in order for the market to be in balance, so balance buyers and sellers, the market needs to have 6 months of supply. We have half that now. So half the amount of supply needed. And I think that's why we're not seeing these big, egregious price declines. But here's something even more interesting out of the report, because we're sort of all over the place here. It says in October, 24% of homes received offers over the asking price. Okay, so once again, in October, 24% of all homes that were sold, existing homes in October, they received offers over their asking price. Now, however, homes sitting on the market for over 120 days saw price declines of 15%. So if these homes have been sitting on the market for over 3 months, that's where you're seeing the big drastic price declines. And in my view, from my experience, and I could sort of talk to Miami-Dade County specifically, and Nassau and Suffolk, but mostly in Miami-Dade, the homes that have been sitting on the market for 120 days have been really just fake pricing. And what I mean by fake pricing is in my neighborhood, right? So I live very, very close to Sunny Isles Beach, Florida, near North Miami Beach, and Aventura. There's some single family homes, so let's say 3-bedroom, 2-bathroom, single family homes on the market for $690,000 to $700,000. Now, in my view, that's not a real price. It's just not a real price. Those prices are wishful prices that were set during the pandemic in hopes that some snowbird will just buy it because they were frustrated with, the pandemic in the Northeast. That is over now. So I think those homes are sitting on the market, and if they drop the price by $50,000 to $100,000, it's going to sort of skew the data, because these are very wishful thinking prices in my view. But I don't know, in your real estate market, wherever you guys live, are you sort of seeing the same thing? Specifically with, you drive past the house and you're like, there's no way that house is worth $600,000. Any thoughts there? Hey, Andy is here from South Korea. Good to see you, Andy. Thanks for joining. Mr. House Deal for You says, JP Morgan becoming a landlord. What do you think about that? Well, I think a lot of institutional buyers have been doing that over the course, I would say ever since the great financial crisis, right? Because what happened during the big meltdown of '08, a lot of big private equity, I would just say institutional investors, bought up a lot of these single family homes that were foreclosed on. They bought them up at pennies on the dollar and have been using them as rentals for cash flow. So I think a lot of those big institutions have always been doing that. Hey, Western Mass Dave. What's up, Dave? Good to see you, my friend. Steph UH says homeowners with low interest rates are staying put. Too hard to buy the next property. That's also a fantastic point. I think Steph hit the nail on the head as to why we're not seeing supply materially go up here. Because if I have a 3% interest rate, let's head out of the Hudson Yards now. If I have a 3% rate on my home and I'm looking at the news And almost every day in the media, I'm seeing big tech layoffs, people losing their jobs. I'm almost like paralyzed with fear, right, as a consumer. So I'm like, I'm just gonna stay put. I have a very, very low rate. I don't want, if I have to sell my home, even if I make a profit, I'm just gonna go back into the marketplace and I have to buy at a 30-year fixed rate mortgage that is 7% as opposed to 3%. So even if I buy a little bit more expensive house or the same price house, I'm probably gonna be paying a monthly payment that is more. So I think a lot of people are just choosing to stay put. I think it's a good point. Joe Drivers is time check. 10:23. Thank you for that. I also have to put in my battery pack because we're running out of battery here. Michael Joseph says wishful pricing isn't all real estate like that. Yeah, I guess prices are just what the buyer's willing to pay, right? You make a good point. George Romano says it's the pace of interest rate increases. Nobody knows the cost of capital. This is George. Very true. Very, very true. Vivian is here. Welcome. But if you guys sort of like the topics that we talk about on the live streams, if you scan the QR code on your screen, I do write a free investing newsletter where we talk about, the U.S. equity markets, emerging markets, fixed income, as well as real estate. So if you want to join us there, it's free. You can scan the QR code, punch in your email, and we will send it to you. We are going to start to send it out on a regular basis now that the year is almost over and I am not too busy, preoccupied with work. So please join us over there. But I'm going to put you guys down now, and I have to plug in my external battery pack because my phone's going to die. And we can't let that happen. At least not yet. At least not yet. Give me a minute. 1 second. Okay, I think we're good. Somebody says, Tom, how were you at soccer when you played? I think I was all right. I will say this. Anytime somebody says or asks, or anytime you ask somebody, oh, how good were you at this sport when you played it? Usually people tend to overestimate for obvious reasons, but I think I was all right. I played in college. I would say better than average. I would say I'm a better soccer player than the average American. That's probably not saying something. Hey, Will M says, even if buying a vehicle outright, the secondary market is so high that upgrading is tough. I can sell the used car I bought 4 years ago for almost double what I paid for it. That's an interesting point. And I will say this. In the CPI report, really the only thing that made material progress is used vehicle prices. Now, FredX, love it. Walking Minnesota, funny. So that is true. During the pandemic and throughout 2021, used vehicle prices have been going gangbusters, right? Been taken off. But they are starting to decline here. Now, I'm going to give you guys a very, very good Twitter account to follow. Really nice Tesla here. There's a really good Twitter account that I would suggest everybody follow. And it's this anonymous account on Twitter, but he's been in the car industry. He's owned multiple dealerships. So he gives you very, very good insight into the auto market as it relates to repos and all that good stuff. The used car market, and man, I'm forgetting the name of it. I think it's called The Dealership Guy, I think his name is The Dealership Guy. If not, if you just go to my Twitter page, at Walks Wall Street, I always retweet his tweets because they're very helpful, so you'll probably see it there. But I think it may be called The Dealership Guy. But anyway, what he's been seeing is that there's been a huge buildup in inventories in used vehicles. And I think specifically now that this, I would say, Twitter Elon Musk debacle has been going on, they've actually been seeing a big decline in the price of used Teslas. So I think just like anything, higher interest rates are impacting the prices of assets. Now, I wouldn't call cars, right, or vehicles an asset, but in general, interest rates impact prices of all assets or financial assets, whether that be homes, whether that be the price of equities, price of bonds, other securities, and in this case, vehicles. Because if you're going to take out a car loan, I think I read in Barron's last week that the average car note that was signed last quarter, so in Q2, was over $1,000. Now, isn't that just sick? That's insane. $1,000 car note is wild. Now, I'm not judging anybody, but just out of curiosity, anybody in the chat have a car note of that size? Now, maybe you do need a car note of that size, right? Maybe you own a big pickup truck and you own your own small business, or you own your own business and you need that kind of car to, or that kind of vehicle to do your job. Or maybe you're just really wealthy, but I just don't think that's sustainable. I think you're going to see prices come down. OF says no way ever. Millie Vanilli says I always buy my car with cash. Jose, welcome. Ziploc Baggy says, what should I invest in? I took out a second mortgage of $100K. I want to put it all on red. Good luck. Alex Greco is here, says, hey Tom, I see my friend Elliot Wave review in the chat. Says, what do you think they're going to rename the FTX Arena? I have no idea, dude. I mean, there was some speculation that they were going to rename it to Citadel Securities Arena, but Ken Griffin kind of put a kibosh to that in the Bloomberg interview. He said he thinks it's a really bad omen to sponsor, to have your name on an arena, and I think I agree. All right, so this is coming up towards the Moynihan train station, Moynihan train hall. You could see a little bit of a piece of Madison Square Garden, MSG, and also the one and only Empire State Building. Will M says, I know many who do, that's for sure. I try to go for something about 3 to 4 years old and buy it outright. I think the ideal would be to sell it about 3-4 years later. Yeah, I agree. Yeah, Ryan Beck, that's true. Ryan Beck says, I mean, a $1,000 payment is all relative depending on how much you make. That's true. I think it's more of a proxy maybe for, because that's what surprised me, right? So the average So the average car note was $1,000. So look, I mean, maybe I'm sort of overstating it, but I just don't think it's sustainable for the average American if they're going to buy a new vehicle to have $1,000 car note. Now, we talked about this before. Beautiful Christmas tree, by the way. Love this. This is 1 Manhattan West. It's looking fantastic. Now, we talked about this before, and the data shows that Americans seem to be holding on to their vehicles for longer than they used to. And this has actually been a very, very good catalyst, or a big catalyst, for auto part stocks, so auto part stores. So you think about O'Reilly, you think about Advanced Auto Parts. This has actually been a very big tailwind for these businesses, because as Americans hold on to their vehicles longer, they're not purchasing new vehicles. Well, as the car gets older and as it's beaten up on the streets in New York City, you know, some of these streets in New York, I mean, potholes and all this other garbage on it, you know, it's going to get beat up. So you're going to spend more over the lifetime of that vehicle on fixing it. So that's actually been a big tailwind for a lot of those auto parts stores. This is the back entrance to the Moynihan train station. Used to be the old post office here. Now, I want to take you guys through the Moynihan train station, but I can't because the internet is so horrible in there. It's just not going to work. Hey, Chris Beeman from Arizona. How are you, my friend? Chris, any update? I don't think you gave me an update on the job offer or the interview that you had. Shoot me an email, or maybe I'll message you after this. Hopefully it went well. Dusty Cole says new cars are a waste. Yeah. Wow, Ryan Royal says my car is 14 years old. If you take good care of it, it's fine. So does anybody know, so what is, I'm not a big car guy, obviously I don't drive, but what would you say is the most reliable, let's just call it sedan, right? Is that what you call them? Like a 4-door vehicle? What is the most reliable brand? Toyota, Honda? Right, I mean, I've been seeing some of these Toyota Corollas on the streets. I mean, they can run to 250,000 miles, some of them. Hondas, yeah. Yeah, Dusty Cole says Toyotas. Yeah, I would say Toyotas and Hondas probably. Man, this is a really, really nice view. Looking at the Empire here. Hey, Laney James says, hey, Tom, mine's a 23-year-old Lexus. Well-loved and maintained. Hey, that's awesome. So, Laney, is Lexus owned by Toyota? Or how does that work? I think Lexus may be owned by Toyota, no? Is that right? Hey, Peter says Kias and Hondas are catching on. 2004 Acura. Laney James says Toyota, yes. Yeah, they seem to be all very reliable, really, really reliable cars. Ron McAllister says, honestly, most repair bills are way cheaper, amortized over a year versus $1,000 a month. Yeah, I mean, it seems it's been a tailwind for a lot of those auto parts store stocks. Steph UH says, we drive a Ford Escape hybrid. The battery recharges itself. Many trips we get 50 miles a gallon. That's not bad. That's pretty cool. So speaking of cars, you know what I was looking into? I was bored one night and I was looking into those hydrogen vehicles. And those things are pretty cool, but you know, Elon Musk came out and said they're not very practical. right? Because you actually have to go to, you know, a hydrogen station to fill it up. But the cars are kind of cool. Anybody in the chat have a hydrogen car? You know, supposedly there's a lot of them in Canada. There's a lot of fueling stations. Anyway. Hemi Power, good to see you. Laney James says I'd buy another Lexus in a heartbeat. I think if I had to buy, I think you guys already know, I don't even have to say it. I'm not going to buy a car. I'm not in the market for it. Obviously, living in big city, but I think I would get a Tesla. I think. So this is the Christmas Spectacular Radio City. Well, this is an advertisement for it, but they perform the show uptown, which we will be headed to now. Yeah, that's the thing, right? There's very few hydrogen stations. All right, so this is 8th Avenue. We're right outside of MSG. We got a little bit of road rage going on, which is not good. Yeah, somebody says Lucid makes some crazy cars. Now, Lucid went public via a SPAC, or special purpose acquisition company, and I think it's down like 90%. Will M says when they figure out a way to grab hydrogen right out of the atmosphere, they're on to something. Yeah, I think, you know, I don't think I would do it justice if I explain it sort of the way Elon Musk does, but I think for a good learning opportunity here, if you go on YouTube or open up another browser, type in Elon Musk hydrogen vehicles, and he gives a pretty good counter argument to it. Now, I don't know, I'm not an engineer, right? I don't claim to be, but I like to look at both sides, because there's some people that say, look, hydrogen vehicles are the future. Some people say it's not, it's very, you know, cumbersome, it's not scalable. But I like to listen to both sides. I'm not an expert, I'm not an engineer, so I don't know. So, but I would advise to watch that video. Somebody said Tesla reliability not the greatest. Yeah, that's true, but I think if I were to get an EV specifically, I think just all of the stuff that it can do, right, is very enticing to me. Now, my buddy lives in San Francisco, and he has a Tesla, and he tells me that with the self-driving feature, right, the autonomous driving feature of the Tesla that he has, he honestly he doesn't even have to drive. He goes to the drugstore, he goes to work, he goes to the office, and back home. And around San Francisco, he can get around just fine. Anyway, I think that is everything we had to cover. Oh, here's one other important fact about the National Association of Home Builders report that I found very, very interesting. Now, of all of the homes sold, of all the existing homes sold last month, the median purchase price was $379,100. And of that, of all of those homes sold, first-time home buyers only made up 28% of sales. That is down 29% from last year. And if you look at the historical average here, the percentage of first-time home buyers is usually around 40% of all the total purchases each month. So we're seeing an environment, and we've been talking about this almost ad nauseum, where it's becoming very, very difficult and tough. Oh, we have to go around the block? Oh no, we're good.
Can't go in, Rob.
Oh, maybe they closed down this this entrance. So this is the new entrance here. So we'll go around. I'll keep a note of that because I have to go there in a couple minutes here. But we've been talking about this on the stream, and it's becoming increasingly difficult for first-time home buyers or people my age, right? In their mid to late 20s to buy homes and acquire properties, right? I'm sure you guys see all those memes on, Twitter, that says, when, it shows a side by side of my parents when they were 20. They're like, let's go buy a house and have kids. And then, our conversations at 25, it's, where are we going to order takeout from? And, which show are we going to watch on Netflix? Because it's so difficult for younger people to purchase property. Because if you look at not only inflation data, but wage data. So one of the things I don't think we talked about that came out of the CPI report was month over month wage gains actually went down, right? After inflation. So real wage gains, which is your salary increase or your hourly wages after inflation decreased while assets are going up. So wages have been stagnant in America when the prices of assets have been skyrocketing, making it increasingly unaffordable for young people to get into the housing market, which is a very, very big issue. And the reason for that is because there was a study done. I think the study was done by Harvard Business School. And the study goes like this. I think it was Harvard Business School. But it says, out of all first generation millionaires in the United States, which means you didn't inherit the money, the vast majority of your net worth is made up of equity in your home. So if we're going to have an entire generation of young people not being able to purchase a home, well, what does that say about creation of new millionaires in the United States? I think it's going to perhaps take a decline as we move towards a renter nation. So a little bit of a concern out of the report, I just wanted to note. So we are right outside of the largest department store on earth. This is Macy's. We've got a lot of people clanging and banging around on the horn. Brad's Brain says, I didn't own a house until my 30s. Millennial generations, or maybe it's Gen Zers, are not realistic. Yeah, I mean, so to Brad's Brain's point, I actually don't think renting is bad to some extent, right? Because renting actually gives you a lot of freedom. And I think when you're young, especially nowadays, you want to be very, very mobile and agile, right? And if you stack up your liabilities too much when you're young, it limits the amount of risk you could take. Now, I'm not saying that a home is a liability. I think it depends on how you use that home, right? If the home is not spitting off cash flow and you're just living in it, then yeah, I think one could argue that it's potentially a liability. But if you're using that home, maybe a duplex or a triplex, to rent out those other units, and you have the tenants paying down the note, then, it's an asset. But if you move to a place like New York City or a major city in the United States, I actually think it's probably advantageous to rent, for as long as you can, just so you can have your options open. So here's a look at some of the Macy's windows here. Mr. Cold, good to see you. Wow, I think this is a solid 9.5 out of 10. They did a really, really good job on Macy's this year. Mises Hayton, which neighborhood is this? This is Midtown Manhattan. This is right on 34th Street, in between 7th Avenue and Broadway. So if you continue to walk down or eastbound on 34th Street, you are going to hit into Herald Square. Oh, this is cool. So they're just putting up tonight the Macy's Thanksgiving Day Parade. Now in this box, hold on, let me go around the thing here. Well, this is actually really cool. So in this box, I think is a big, giant blow-up turkey. So tomorrow night on the stream, we go live almost every day at 8:30 p.m. Eastern. So probably tomorrow night, we're gonna see a massive blow-up turkey on top of this little awning here at Macy's. I've never seen it in the box before. I guess that's how they ship it here. All right, little bit of off topic here, everybody, but can you guys actually believe next week is Thanksgiving? I mean, seriously, can you guys believe that? I can't even believe that. It seems like it was just yesterday we were walking around, it was August, it was hot. It's insane. I know, Ryan Beck, I can't believe it. It's insane. This week flew by. The year flew by. It's insane. Okay, now we are coming up on Herald Square. We're gonna make a right, and then this is where the main Macy's windows are, right here. But if you guys are enjoying the live stream so far tonight, and all the different topics we've talked about, feel free to leave a like on the video and hit the subscribe button if you're new. We usually go live about 5 days a week between New York City and Miami, Florida, starting at 8:30 p.m. Eastern. Wow, Dan Zhang. This is Tom, can you believe even WeWork has a Black Friday sale now? So what is the price of the WeWork? I may have to check that out because I pay about $300 a month. Hey, Brad's Brains is Tom. I'm moving to Houston in January. This is my last Midwestern holiday season/winter. Well, congratulations on your move, my friend. Houston's a great place. Love Houston, Texas. All right, really quick, everybody. Out of these three, which one do you think is the best? I'll give you a good look at each one. So this is number one. And then I'll show you guys number 2 and number 3, and then we'll vote on which one is the best. All right, so this is number 1. This is number 2. All right, this is number 2. All right, and this is number 3. All right, I'm gonna go with number 3. I think I like number 3 better than all of them. What about you guys? Yeah, I think number 3 by far. Not even a competition. Ryan Bex is 213. Wow, really? I like 3, man. Steph UH likes 2. Let me see 2 again. Hey, marketing videography. What's up, my friend? Happy Friday. Yeah, I think 3 I like the best. I mean, they're all good, but all right, we'll see one more time. Let's see. Queen of Swords is 213. I think they did a good job. I still like the third one the best though. Hey Ken Glass, welcome, good to see you. Abdullah likes 3. Yeah, Abdullah, I agree with you, my friend. Oh, there's more. This one reminds me of, this one's actually pretty neat, this one. This one's all disco balls. Oh, I guess for New Year's Eve. I think they looked all right. All right, let's cross here. So this is 35th. The only other thing for those of you who are just joining that we talked about, that I just want to bring to everybody's attention one more time. We talked about the divergence that we've been seeing between the XLE, which is the Spiders ETF that tracks the energy sector, and also crude oil. So I think we need to pay close attention to that, because historically, when you see that divergence, usually, now not all the time, but usually it means that this energy trade could be getting a little bit long in the tooth. Now, here's another thing. So if you look at the Dixie, and the Dixie is the dollar index that tracks the relative strength of the dollar against a basket of all other currencies, the Dixie is finding support at its 200-day moving average after selling off quite ferociously. Now, are we going to see an environment where the dollar wrecking ball comes back to wreak havoc on the equity market? And what I mean by that is this. Usually, right, on a relative basis, when we see that dollar or the Dixie come down, that tends to be positive for the equity market, right, for stocks. Now, we've seen major companies out here, from the likes of Apple, from the likes of Microsoft, and the like. Oh, these are 2 walk signs. I think it's broken. We've seen, so Apple specifically, when we did a deep dive about 2 weeks ago when Apple reported earnings, Tim Cook came on the earnings call and said that they were very disappointed because even though that they had about an 8% revenue increase year over year, it would have been a double-digit revenue quarter if it wasn't for the strong dollar, okay? It was about a 600 basis point hit to top line, because if you're a multinational company and you are selling product overseas in foreign denominated currency, when you go to transfer that currency back to dollars, well, you could buy fewer and fewer dollars. So it was a 600 basis point hit to the top line and also impacted bottom line. So usually when you have the dollar have some weakness here, it tends to be positive for equities. So I know I've sort of talked about this fractal before, but if you look at the bear market rally that we had, the bear market rally that we had that concluded in August, you also had a temporary top in the dollar, and you also had the 10-year US Treasury yield come down. So it seems as if we're finding a bottom in not only the dollar, but also that 10-year US Treasury yield. So if we understand the relationship, right, between bonds and yields, as the bond or the note is selling off, you have an uncontrolled spike in yields. So the 10-year US Treasury yield goes up, which puts pressure on the equity market. And if we have the dollar rising at the same time, it puts equal amount of pressure on the equity market. So I think we could be long in the tooth in this sort of potential bear market rally here. If we see a big bid in the dollar and we see an additional sell-off in the bond market, it seems as if like this is just a run-of-the-mill bear market rally as we rally into the 200-day. So I think all of those mechanics we need to watch. We need to watch, number one, the divergence between crude oil and all of the other major oil and gas stocks, right? Or if you just want to look at an index or an ETF that tracks all of them, you could take a look at the XLE and look at the relationship, or next week, look at the dollar movement and keep your eye on the bond market, specifically that 10-year Treasury. Oh, Austin City Limits, you're right. I'm losing track of time. Thank you for that. So we are now coming up on 2 hours here, which means we do have to depart because I got to get home and I lost track of time. But team, I will see you tomorrow. We will be live at 8:30 p.m. Eastern time from New York City. If you enjoyed the live stream tonight, feel free to leave a like on the video. Subscribe to the channel if you are new. If you want to sign up for our free investing newsletter, feel free to scan the QR code on your screen, punch in your email, and you will receive our free newsletter where we talk about the U.S. equity markets, emerging markets, fixed income, and the like. I want to wish everybody a very, very happy Friday, and hopefully you have a restful weekend, right? Recharge. We're getting ready to go into the Thanksgiving holiday week. And we'll see you tomorrow. That's all I got. I'll cut you guys loose. God bless. Dr. Longest, appreciate it. MSK, Andy from South Korea, thank you, my friend. Joan K, Mike MTL, me, touring different cities, Layda, Sunshine After Rain, Austin City Limits, Night Rain, appreciate it. MIWA, thank you. Malcolm McStevenson, appreciate it. Western Mass Dave, Gary Mohammed Abdullah, Connor, thank you. Jordan from Canada, always appreciated. Queen of Swords, Penelope, the one and only, thank you. Evo Charles, appreciate it. And to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere. You just need to know where to look. I'll see you guys tomorrow. Take care.